Hello, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's Big Spot if you don't hablo español, and I am super excited to announce the Art of Reading Price Section 30-day boot camp. Now I know you may be wondering, well, Tim, we just had the Art of Reading Price Section mentorship. What's the difference between the mentorship and the boot camp? Well, unlike the mentorship, this is a month-long boot camp for up to 20 people where I will be dedicating the entire month of January to share my understanding of the ICT concepts and how to use them on a day-to-day basis. Not only will I just be sharing my understanding of the ICT concepts, but once you're inside the private Discord, you'll have access to weekly Q&As, you'll have access to weekly homework reviews, you'll have access to at least 14 tape reading sessions, and you'll have access to the private Discord for up to 6 months after the boot camp ends. And at the end of the boot camp, each individual that's inside the boot camp will have an opportunity to schedule and conduct a 1-hour one-on-one coaching session with myself. Now, the boot camp will be broke down into 4 phases. Phase 1 will be a revamp of the Art of Reading Price Section educational material. Phase 2 will begin our tape reading sessions. And phase 3, we will move into developing strategies for those that are unable to develop their own strategy. I will work with you to come up with a strategy that fits your trader identity or your trading style. And phase 4 will be a combination of tape reading, Q&As, and we will start to schedule the one-on-one coaching sessions for everyone involved. Now, let's get to the meat and potatoes. How much does it cost? Well, the Art of Reading Price Action Boot Camp will go on sale beginning December 1st, 2024 for the price of $1,000. But if you are a current member of the gang, you have a special discount code inside the Discord right now, which you can use up until December 25th to get 75% off that $1,000. So it will be $250 for any current gang members if you use the code that's inside the Discord. Now, for everyone else, you have a discount code for 50% off that's good until December the 14th. And that discount code is SPIDER50. Again, for everyone that's not a member of the Spider Gang Discord already, your discount code is SPIDER50 and it's good for 50% off, and you can use that coupon code up until December the 14th. Now, it's first come, first serve. It's only available for up to 20 people. So once it's gone, it's gone. Take advantage of it today, and I hope to see you on the inside. Again, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's Big Spot if you don't hablo español. Y'all be safe out in these trade streets, man. Go. Yeah. What's going on? What's going on, everybody? Hey, how you doing? Good evening, great people. For those that are part of the Discord, every stream now you Discord not show. So anyway, for those that are part of the Discord, I am live. I'm in the voice channel. If you want to pull up and join me in there, if you want to, unmute and ask anything or say anything, I'm in there. For everyone else on YouTube land, and are we simulcasting on the Twit? Yes, we are streaming on the TikTok. Man, I could not think of that. TikTok. Right. Good evening. If this is first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome and give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's Big Spot if you don't hablo español. And you are now in tune to another episode of the intraday price action recap. Recap. What's going on, man? Shout out to everybody in the chat. If you in the chat, put something in the chat so I can see you. I see Deborah in the chat. Deborah! Tell Sure when I said, hey, what's happening? I salute you with both hands. What's up, Lump? What's going on, Valentine? What's going on, Tish? What's happening, Kushaya? What's going on, Kim? It is Wednesday, so me and the mentees have... what's up, Marco? Me and the mentees got a homework review session that we got to do at 7. Excuse me. That's if anybody got any questions. They don't do homework no more. Ever since I posted that last art of reading price action video, they don't do no homework no more. They just pull up and they be talking something. We just want to hear you talk. That right there, that's some high quality H2O right there. That's some high quality H2O. Hey man, let's get right to it. Let's go over here and look at the the charts. Y'all know what I'm saying, man. Let's look at the charts. Today, if you do not know anything about high impact news, right? There are certain high impact news events that will cause the market to act a certain way, right? Who can tell me what are the high impact news events that make the market act a certain way leading into that news event? Somebody tell me, what are they? Give me the top 2. The top 2 that everybody should know about. Everybody should know about these top 2. CPI, and what's the other one? NFP, that's a good one, right? But the top 2, in my opinion, CPI and FOMC. Those are the top 2 in my personal opinion, right? Right, those are top 2. Because CPI is dealing with inflationary type stuff, right? That's what in the Fed, they care about that. So when the market is waiting for those CPI numbers to come out, it will make the market act in a certain way, meaning it's just chilling. It's going to consolidate. We used to say the market will make a move, then slide to the right. Slide to the right. We say that because it'll just chill and won't do nothing. And FOMC, right? Now, if you know anything about trading futures, you know that FOMC, it happens in the afternoon. They make the announcement at 2 o'clock. Oh yeah, FOMC, it's the meeting that the Fed presidents get together and they sit down and they talk and decide what they're going to do as far as interest rates. Are they going to raise them? Are they going to cut them? Are they going to hold it where it is? And so since that right there, that's why I consider those 2 the top. CPI is inflationary stuff, and the FOMC meeting is the decision of the rates, the rate, the interest rate, right? How much money you get back for investing into like bonds and stuff like that, and how much the interest rate. Yeah, you know, interest rates, right? So today was FOMC. So at 2 o'clock, they make the announcement. Then at 2:30, they have a press conference, right? So personally, on the day of FOMC, I have learned that I don't want to do anything in that morning. Because in that morning, price is just going to range. You're just going to, it can show you some beautiful highs and some beautiful lows, and it may never take them. It may just slice and dice and chop you up all morning because it's just waiting for the rate announcement so that the algorithm can manipulate price to where it wants to go, right? Between the rate announcement and the press conference, it's going to use that news to manipulate the market to where it wants to go, right? So today we had FOMC, right? And if we stretch this out here, right, let's do this for a second, right? Do this for a second. Forget about that long drop down there. Right. This is where the market opened up last night at 6 p.m. Right there. The market opened there. Okay. So let us go here and put a line there. All right. I'm going to change that to orange, change that to 2, change that to solid. All right. And we're going to mark that as le open. We're going to mark that as le open. Open. Let's make it black so that we can see that. Okay. Open. All right. And then birds of a feather, we just stick together. Uh-oh. What did I do? Where did it go? Oh, it jumped up there. Like, why does it keep jumping up there? I'm like, where did it go? Okay. I don't know what I'm crying for. Mid-nizzle. All right. Mid-nizzle. Middle. 2. All right. Changing all of these to I could have did all that on that right there. Like that. Trend line. All right, what's my All right. Sorry about that, y'all. Now that we got the lines on there where y'all can see them, don't really need this trend line. Don't really need the trend line. All right, so now getting back to what we were saying. Today was FOMC, right? And this is where we opened last night at 6 p.m. Right? As we can see, price dropped down, took out some sell side, right? Rejected off of it, right? And that gives us an idea. We reject off this low, give us a target of the high that sent us there, right? So we, came up, set relative equal highs, pulled back into the range at the imbalance right there, and then took out the high that sent us there, Okay. And then coming into midnight here, you see that from midnight over here until 4:30, right? We just kind of traded in a very small little range, right? Pushed up out of that range and then traded into another small little range, right? Up here until 8:30, right? So 8:30 is when it's the news embargo is lifted for the indexes. All right. So here at 8:30, price started to spool. All right. Price started to spool. Where did price spool to? All right. From here, from 8:30 over here up until 9 o'clock. All right. From 8:30 until 9 o'clock, price spooled into this sell side liquidity pool here. All right. Displacing away. Showing a sign that price wants to do what? Right? Showing a sign that price wants to go down. Okay? Why is it showing a sign that price wants to go down? Right? Because we've come up and we have taken out buy side right there. Right? If we zoom out, we see this is internal buy side for this range right there. Right? Remember, we always want to be aware of the dealing range that we are in, right? So for this range here, even down to that low right there, this is, right, internal liquidity. Prior to getting to that low right there, say, Tim, why were you focusing on this area here, right there first? Because this area there, we initially, right, before this day started, we broke out the bottom of that area. Remember when we came down and took out that sell side? We broke out the bottom of that area, right? And what do we say about when you take a low and reject it right there? Not going back to that high. What do we say the algorithm is telling us, right? The algorithm is saying what? I want to do what? What do we say the algorithm is doing right here? It's saying what? I want to go that way.
It wants to go there, but not right now.
That's it. Oh, let me put this on mute. Let me mute that. I don't want it to echo. Say that again, Jim.
It wants to go down, but not right now.
Yes, I want to go down, but I have to do something this way first. Right? And then when price gives you that little signature, right? You just have to wait until price goes and take care of business, right? You don't try to just guess at what it's doing. You watch for the signatures. Okay, so that's why I was focusing on that little piece of price right here. This little piece of price here, and then I say even down to there, because in this price leg here, we broke out the bottom of it over here at the 6 o'clock open. Right? We broke out the bottom of it, but price had to do something first, right? Tim, what did price have to do? If we come over here, we find out that price came and took out this internal liquidity right there. It came out, took out that internal liquidity right there. That's what price had to do. Right? Well, Tim, how do you know that's what price had to do? We watch for the clues, right? We look for the clues, okay? And where is the clue that taking out that buy side is what price had to do when it came here and said, I want to go this way, but not just yet. That displacement right there. When we got that displacement, right? What do we in the gang call this right here? That displacement right there. What do we call that? Right? Somebody tell me what is that? What do we call that? If you don't know what I'm talking about, what sound does it make? What sound does it make? There you go.
Oh, yeah.
Pow! There you go right there. You know what I'm saying? Pow! down. Right? That right there. That's letting us know that's what the algorithm had to do. Because once it finished its business, it showed you, I'm ready to go now. Right? It said I'm ready to go now. So now that price has shown you that it's ready to go now, right? We come here. That's our 9:30 open right there, where I just put that dashed line right there. Right? That's our 9:30 open. And if I remove that line, look what we did at this 9:30 open. Right? In the great world of ICT concepts, right? What do we say the market is doing when we generate relative equal lows or highs? What has the market just done? Right there. What has the market done right there?
Engineered liquidity and gave us a clue as to price point or liquidity point the market wants to come back to.
Exactly. I ain't been on my soundboard. Shout out Jim pulled up. Shout out I think Deborah put, I don't know who that was. Who said Pangao? And then who's that just talk? Was that Yolanda or Don? Who was that just talking? Was that Yolanda or Don?
Shonister, me. Yolanda.
Yeah, Yolanda. Okay. I couldn't see the name. I knew the voice, but I couldn't see the name. All right, so shout out everybody pulling up with the hard-hitting answers. And then shout out Kashaya, Kim, Valentine, Will in the YouTube chat, man. Y'all give it up for y'allself. Pulling up with the hard-hitting answers, right? So at 9:30 here, right, price came down and set relative equal lows, engineering sell side liquidity. Now, what does engineering this sell side liquidity support the idea of? And Yolanda already said it, right? It supports the idea of coming back to engage that, right? Because we engineered liquidity, right? Retail sees a double bottom now, right? But the algorithm is letting you know we're coming back to engage that. And since we know that it's coming back to engage that, that supports the idea of what kind of program still being intact. A sell program. What do we say, right? If we go back to the other days, what do we say this right here could possibly be after we did this over here? We said that can be possibly what? Right? This signature there was telling us that this was what? This signature, remember, we just talked about it the other day, right? When none of this over here, right? When none of this over here, smart money reversal. Y'all give it up for Tish, man. Smart money reversal, right? When none of that over there yet, right? And so we said that, let me get these brushes out the way. Uh-oh, I took too many off. That's okay, right? Once price, right? Price, we said price traded up, and then once we got this move here, right there, right? We said that this little area there, that was our last area of accumulation going up. We said we came over here and we got below that area of accumulation. That was a signature that this is possibly the smart money reversal. And then once we respected that area and displaced away, we said that now we know that that's the smart money reversal. And if that's the smart money reversal, where are we? Where are we? If we know that's the smart money reversal because of the signatures that price is giving us, right? Where are we? We're not guessing, right? We're not guessing at all. Not based off the signatures and price, That's the smart money reversal. And where are we? We on the right side of a market maker sell model. Y'all better stop playing with Tish out here, man. Y'all better stop playing with Tish out here. Quick on the answers today. Right? Quick on the answers. Shout out Marco. Right? On the sell side. Right? We're on the right side of a market maker sell model. And if we're on the right side of a market maker sell model, that means price has switched from a buy program to a sell program, right? And now that we've identified that price has switched to a sell program, right? Oh my goodness. Now I know why Tim had these sell size marked out down here. Because if we look over here, right, we can say that this could be the initial consolidation for a market maker sell model, right? Does it have to be the initial consolidation? No, it ain't got to be, because the algorithm can be looking at a much bigger time frame. It can be looking at this, right? It can be looking at this, but you just want to identify a spot of a possible initial consolidation, because why? You can have sell models inside sell models inside sell models, right? You can have this big market maker sell model here, right? But then you got that sell model inside of it, that sell model inside of it, that sell model inside of it. You can have small sell models inside sell models, right? Price is fractal. Price is fractal, right? Now, that we know that the algorithm has shown us back over here, because we already talked about it. That was the smart money reversal. We're on the right side of a market maker sell model. So if you understand this and you're advanced enough, you can use the knowledge that that was the smart money reversal. You're on the right side of a market maker sell model to look for reasons to sell during this bullish during this bull market uptrend, right? Or you can just sit on your hands and wait for the market to go through the selling portion, go through the retracement, go through the pullback, whatever you want to call it, and then give you bullish signatures to start buying again, right? But since we know, since we're day traders and we don't want to sit on our hands every day, right? Now that we know how to look at the signatures, we said, hey, we're in a sell program, right? Hey, we opened up last night, swept sell side, said, I want to go that way, not just yet. Telling me the sell program is still intact, right? So what do I want the sell program to do? I want it to respect premium PD arrays and disrespect discount PD arrays, right? So looking at where price is here from this low, if we come back up, right, to here, that's a dealing range. What do we want to see about our dealing range? We want to look to the left and see if our dealing range is the part of a parent dealing range. And if we look here, right, it is, because we come from this high, right, and then we can come all the way down to that low right there. In this entire time, right, the highs are being protected. So this dealing range is subordinate to the overall dealing range there. So in the sense of this dealing range here, which was this piece of price that we talked about in the beginning, we were busting out the bottom of it. That was telling us what? That price wanted to go down. When we bust out the bottom of it, price said, I got to do something first. So now it's extended this range a little further down. And now that it has extended this range a little further down, you have 1, 2, 3 areas of internal buy-side liquidity that the market can engage with, and the sell program still be intact. Why is that? Because whenever we get expansions, right, we expect price to retrace back to internal liquidity. If we take external liquidity, we expect it to go back to internal liquidity. So now we have 3 levels, 1, 2, 3 levels of internal liquidity that we can retrace back to. How far will it go? Who cares? I care not how far it goes. Why? Because I just want to see it go, engage with some liquidity, and give me a sign that it's ready to continue down. And if for the other way around, you just flip it on its head, right? Ready to go back up, right? And then, Corey, yes, I traded this afternoon. Now, when we come, and speaking of this afternoon, let's come back over here because today was FOMC. So at 9:30 right here, right, when we came down and engineered this liquidity, we're not looking to do anything prior to FOMC, right? This is when the FOMC announcement drops right here on this thunderous red candle right there. Right? So what do we say? We have certain news events that you don't do anything in front of. Right? So, what's up, FC? FOMC is one of those events where I, Timothy Lee Rogers Sr., have made a rule that the morning of FOMC, I will not do anything. Right? I traded last night. And I traded this afternoon. The morning of FOMC, I do not do anything. Why is that? Because FOMC, right, that's something that affects the U.S. indexes, right? The U.S. indexes, the New York session starts at 9:30 in the morning, right? So whenever New York starts up, I'm not touching it until after FOMC announcement comes out, right? And as you can see, all we did was stay in this range and take people's money from 9:30 in the morning, right? Got people chasing this drop, took it back up, got people saying, oh, we're reversing. It's a double bottom. Came up. Disappointed them, did not take the highs, right? Came back down, got them chasing it again, came back up, got them excited about the longs, came back down, and just chop them up all day long, right? CPI is in the morning. CPI is at 8:30 in the morning, and I don't trade pre-market. So now with CPI, sometimes I'm cautious about taking trades like the day before CPI because CPI is such a big news event that happens in the morning. Sometimes it'll make the day before act wonky. Just like the morning of FOMC CPI. Sometimes CPI will mess with 2-3 days before. If CPI drop on Wednesday, Monday and Tuesday might be trash, right? It ain't no guarantee that it's gonna be trash, but it may be trash, right? If they want to hold it in a range. That's why when you start seeing them signs of high resistance, just go ahead and chill out and wait for CPI, right? Look for the signatures, okay? And scalp McGee. You know what I'm saying? Scalp McGee. In and out. Double Dutch. Okay? So, but even in the, what do we say? Even in the midst of high resistance, you can't, what can't you stop? Somebody unmute and tell me what you can't stop, right? Even in the
algorithm.
You can't stop it from being what? You can't stop the algorithm from being what?
The algorithm.
You can't stop the algorithm from being the algorithm. You got to say the whole phrase. Don't be coming up with half of the phrase now. If Sherwin pull up, Sherwin gonna give me the whole phrase. You know what I'm saying? You can't stop the algorithm from being the algorithm, right? Even in the midst of this high resistance right here, right? What did the algorithm tell us right over here? Y'all walk me through the steps. Right here, the algorithm said, I want to go down, but not yet, right? So it's telling us that it wants to do what? It's what? Bullish or bearish?
Bearish.
Bearish, right? So price comes back up, right? And then it takes out the buy side, and then it displaces down right here before the 9:30 open, right? This displacement down, right? That's the displacement with the fair value gaps on the expansion, rapid expansion, leaving fair value gaps. That's your displacement. That displacement down giving us a bearish break in market structure. It confirms that price really is what? Bullish or bearish?
Bearish.
Bearish. Okay. So it's telling me I'm bearish. It's telling me I'm bearish. And then we come down here and we engineer sell side liquidity. Right? We engineer sell side liquidity. And so when we come down here, stop on a dime, and then reverse back up, right? It's coming when we trade below equal bodies, right? That's just like going below a low, right? That's saying I want to keep going down, but not yet. That's just like going below a swing low, right? Going down below them equal bodies right there, right? I want to go this way, not just yet, right? What does it not just yet got to do? It comes back up to the internal liquidity right there, right? It went past the lowest one. Whenever you got multiple imbalances, you have to allow for price to go to the furthest away. In this case, it's the highest one, right? And in the midst of high resistance, we anticipate what? Deeper retracements, right? So we get a deep retracement into the bearish fair value gap, right? And then we come back down, respecting premium PD arrays, even when we swept the liquidity, respecting it because we hit it and got up off it, right? Respecting the premium PD arrays, still showing that the sell program is intact, right? So nothing about the day was telling you, hey, let me try to buy. Let me try to pick the bottom and go up. Every signature that the market gave us was showing you that the market wanted to come down all day long. It's just a matter of not messing around in this, because you know at 2 o'clock FOMC is going to be, the Fed is going to announce the rate, right? So what do you do in this case, Tim? No, you don't get in and in hope. You wait to see what are they going to do, right? What are they going to do? How are they going to manipulate it? Are they going to manipulate out the buy side? Or are they going to use it just to push toward the sell side that you're already looking to attack, because we said the sell program is intact? You don't know which way they're going to push it. So don't try to guess, right? When the Fed rate came out, look at this 15-minute candle right here. Boom! Boom! That thing dropped it like it's hot. Ripped. Coming down, right? Ripped, coming down, okay? And you say, Tim, how do you even trade anything like that? What do they call this right here? What is this called right here? Looking at these continuous down close candles, what is the algorithm doing right here? Can you go over the ES? Because I thought it would have a deep retracement, but it ended up taking out buy side liquidity. Spooling. Very good. Spooling. Shout out Tish. Tish been pulling up with the hard hitting ounces all night. Shout out Kashaya. I don't know if Kashaya cheated just then when I said it, but I saw Tish with it first. But shout out Kashaya. Okay, spooling. Whenever the algorithm starts spooling, right, you do not try to predict a top or bottom. You just keep looking for liquidity that makes sense in where are we? Where are we? We are on the right side of a market maker sell model, right? So when the algorithm starts to spool, right, I'm looking for liquidity that makes sense, right? This liquidity makes sense. Now, Tim, what's this right here? That right there, let's go up in time. Go to our daily charts, right? That right there, if you are bullish, where do you want to buy it? If you are bullish, where do you want to buy it?
Discount.
You want to buy in a discount, right? You want to buy in a discount, okay? If you want to buy in a discount, you want to know where the discount is in your dealing range, right? That right there is the 50% of the entire higher time frame dealing range, right? That's our entire higher time frame dealing range. Oh man, this dude just picking stuff out and just picking stuff out after the market done sold out to it, and he's just putting that, just shut it up. Because if I turn on my TDA, what is that right there? What is that right there? Can somebody tell me what this is? What is this right here, gang gang? What is that right there? What is this? Somebody tell me what that is. That orangish yellow line right there.
Low month.
Low month. And then the monthly low, what do we call that? Right? What do we call that? The monthly low, the daily low, you know what I'm saying? Any type of range low. We call that what? Not ARP. Let me help y'all out. Y'all acting slow now. If I right click on this right here, do y'all see monthly low anywhere? Do y'all see monthly low anywhere? No. What does that say? Can y'all read that right there?
Box bottom.
Box bottom. That's the bottom of our box, right? You know, we got the box theory. We got the bottom of the box and we got the top of the box, right? That's our monthly high. That's our monthly low right there. What do we do right here? We bust out the top of the monthly box, right? So since we bust out the top of the monthly box, right? If we got our Fibonacci tool, when we start out the month, if we got our Fibonacci tool anchored from there to there, right? If we got it anchored here and we bust out the top of the box, right? On that, what do? We grab the Fibonacci tool and we extend it until we stop going up. And look at where that line is. Oh my goodness. It's right there where it says range equilibrium. So if you want to be a buyer in the bullish market, when you get an expansion, where do we anticipate price to at least retracing back to at a minimum? We want to see it come back to what? At a minimum when we get an expansion.
Equilibrium.
Back to equilibrium. So it's not made up for anybody who may just be tuning in and don't know what the gang do. That's why that's there. Because if you want to be a buyer in the bullish market, you want an opportunity to buy at or below equilibrium. You want it to be at a discount, right? At a discount. Got it? Get it? Got it? Good. Everybody tracking. Everybody tracking, right? And the most opportune, boom, the most opportune spot to buy would be below that opening price right there, right? Can anybody tell me why the most opportunistic whatever I'm trying to say, why is the most opportunistic place to buy is below that opening price right there? Right? Can anybody tell me why? The month open. Exactly, because you want to buy in a discount, and if you can, you want that to happen below the opening price. And since price is fractal, right? We're down here at equilibrium. Right there, that's the monthly open. So the best opportunity, the most, you know what I'm saying, would be right there below 21,260, right? Not saying you just jump in, but this is where the best opportunities happen, right? Because you want to buy in a discount, preferably below the open, right? And it just so happened that this month open is right there in close proximity to equilibrium. This month's open rests in a discount for the dealing range. So that would be the best area if you had the opportunity to do so there. Now, back to what we was talking about spooling, right? I got 9 minutes before I got to go hang out with the mentees. Okay? When price is spooling, right? Now that I got all this junk on my screen, let me turn this off. Okay. Now that price is spooling, and you can see here, right? See that right there? Who can tell me what that little box, that little orange box is right there? Why y'all think that orange box is right there? Why y'all think I put that orange box there?
The micro.
The micro. It ain't a macro. It ain't a macro. It's the micro. It's the micro.
Same thing. Who was that?
That was Deborah.
I said the same thing.
It's the micro times. You feel me? Right? That's the micro time. Right? So that's the time when I'm looking to see if I can execute something. Why? Because price is spooling. Right? These are 15-minute candles, right? We don't have a green 15-minute candle from 2 o'clock all the way down here to 3:30. We don't have one green 15-minute candle at all. So price, we can, at this point right here, right, after that candle, and this candle, price is showing you that it's spooling. It's not trying to retrace. One thing that not only ICT traders, but we're very bad for this. But traders are always looking for the retracement, right? They're always looking for the retracement. They're always looking for the reversal. They're always trying to pick the bottom. They want to get the lowest buy and the highest sell, right? But when price starts spooling, there's nothing you can do to stop it. It's going to spool until it gets to a place where it's satisfied, right? So when price starts spooling, right, and if you see here, right, I had the sell side marked out for the relative equal lows that we created. I'm waiting for FOMC to see if we manipulate up and go down, or if we just go down, because I'm looking down because price has been telling us ever since back over here that it's in a sale program, and we have not taken out any type of liquidity at an initial consolidation. So I'm not looking for a reversal. I'm just looking for the sale program to stay intact, right? Been bearish since over here in the short term for day traders, okay? We've been talking about it. Go back and look at the tape if you don't believe me. Now, when price starts spooling, right, you're just looking for opportunities to participate. Right now, this is where your own trader style, your own trader identity, your own risk management, this is where it comes into play when you want to see what time frame am I going to drop down to participate, right? Because here on 15-minute candles, right, it takes a long time for a 15-minute candle to print. So you got the FOMC announcement, that's the first 15 minutes, right? And then the second 15-minute goes into the press conference, right? So when the press conference comes on at 2:30, right, we push back up, but we fail to get into this SIBI, right? Since we failed to get into that SIBI and price is spooling lower, we now know that to be what? Right? On the second half of the manipulation, right? Breakaway gap, right? Who had to scratch his throat just then? Who was that with the scratch his throat?
It's Derek.
Oh, Derek. Shout out Derek, man. Y'all give it up for Derek pulling up with the scratch his throat and all. Breakaway gap. Right? So, right? We do not trade back there. So now we know that's a breakaway gap. That's another signature. Right? That's another signature. Okay? What is that breakaway gap signifying? Right? That breakaway gap is saying, I'm in such a hurry, I do not want to go back there, and I'm not going to go back there until I complete something down here. Right? So now, at that point, since we know that this is a breakaway gap, right? And this is the start of the second half of the manipulation. And that's all the far that we go up, and we respect the consequent encroachment of this down close candle's wick, right? At that moment there, you should not be looking for a retracement into this, right? Because just imagine these candles ain't here yet, right? That right there pushing up and then closing down here like that, we're not trading back there. You should not be looking for a reason to go back up there. So now at this point, right, it would be, oh, let's go to the start of this candle right there. At this point there, now you can choose. I go to the 1 minute. You can choose a lower time frame to go lower. Let's go to 5 minute, people, for those who trade the 5 minute, right? So now at this point here, this is when the market has shown you that it don't want to go back. Let's go back to 15 minutes, right? Right. This is the breakaway gap right here. Let's mark out the breakaway gap, right? We have a volume imbalance there. Is the volume imbalance there? No volume imbalance. No volume imbalance. So this is the breakaway gap, right? We're going to make it red. I got 2 minutes and I got to go, y'all. Right? Breakaway gap, right? Go down to 5 minutes, right? When you get to the 5 minutes, you see that on the 5 minute here, we traded back into this SIBI and we didn't go to that breakaway gap, right? So now this is confluence that price does not want to come up here. Why is that? Because that breakaway gap, right, is there on the 5 minute. Price is showing you I don't want to go up there. This SIBI, right, we're respecting consequent encroachment of that SIBI right there. Okay, we're respecting consequent encroachment of that SIBI. On a lower time frame, you can see here that we swept out some buy side liquidity. We attacked some buy side right there on a lower time frame. See that wick above that candle right there? After we had traded up inside this fair value gap, what rests above the highs inside the fair value gap? Tasty buy side to the algorithm, right? So on a lower time frame, it took out some buy side right there, right? And then it showed you it did not want to go back up there. How did it show me that, Tim? Because it is respecting these candles. It's not breaking through these down close candles here. It's not breaking through them, right? We're constantly going lower and lower and lower. So now at this point, right, you can be looking for a reason to enter, right? On the 5 minute time frame, right? On the 5-minute time frame, you do not get any type of opportunity on the 5-minute time frame to enter until price trades back up into this bearish order block right here, right? That's your first opportunity on the 5-minute time frame, right? On the 1-minute time frame, right, you have an opportunity here, right there. Displace down, retrace back into the fair value gap, come back down, right? We come in here into the macro time there, right? Displace down, trade back up into the fair value gap, right? One more time, and then drop down, right? So I got to go hang out with the mentees right now, but when price is spooling, don't try to jump in front of it. Look for signatures of what price is telling you, right? When you see it, hey, that's a breakaway gap. It's not trying to go back. Let me start looking for reasons to get short. Price doesn't want to go back up there, right? And then we got all the way down to equilibrium, right? Bob's your uncle. Whenever you get to liquidity, hit that liquidity. How low can it go? We got liquidity over there. Hit that liquidity. How far can it go? We got liquidity over there. Hit that liquidity. How far can we go? We got equilibrium right there, right? Well, Tim, why didn't you just mark out that? I don't want to mark out that. I want to mark out the equilibrium, because if we get through this, then I want to see it come all the way to the discount. Don't be playing with me. Don't come down here pump faking me. I want to see it come all the way down to the equilibrium, because that's why I anticipated trading to at a minimum. And with that, I'm not going to ask you for any questions because it's 7:01 and I'm supposed to be hanging out with the mentees right now. Yeah, I know at least one person got a question that's a mentee. So we're going to go ahead and call it, man. I appreciate y'all for hanging out with me. If you on the talk of the ticks, thank you for joining me. If you on the U of the tubes, thanks for joining me. If you are a mentee, pull up inside the mentee voice chat. Matter of fact, I'm popping over there right now. Right, so pull up inside the mentee voice chat. Right, come on over there. Everybody that's on YouTube. Tomorrow is what's tomorrow? Thursday. Yes, tomorrow is Thursday. What up, cuz? Tomorrow's Thursday. I don't think I have nothing going on, so I'll see y'all again at 6 p.m. for the intraday price action recap. Again, it's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just big spot if you don't upload a spin. Yo, till the next time I decide to get on Algo's internet and share my thoughts on this thing we call price action. Y'all be safe out here in these trading streets, man. Gone. Yeah. What just happened?